The majority of Americans are working to climb the corporate ladder so they can hopefully one day get rich, but have no actual idea of how getting rich in corporate America actually works. I'll show you. The CEO of your company has a fiduciary duty. That means a legal obligation to make one person rich. Do you want to guess who? It's not the customers that are buying products from your company. It's not you or the other employees that are working in the company. And it's not the other executives or directors that are working in the company. The CEO has a fiduciary duty, meaning a legal obligation to the shareholders of your company. That is the owners of the company. It is their goal to make these people rich. That means that this person is directing these people, your employees and the executives in the company, to create products that customers want to buy, which will ultimately make the shareholders rich. The CEO is leading the employees and the executives to get money out of customers to benefit the shareholders. But let me actually demonstrate why it's so important for you to understand this. Let's assume that a hypothetical company RGOY, random guy on YouTube, makes $1 million a year in revenue. Now, of course, revenue isn't profit. This company, RGOY, has expenses to operate. Let's assume that there are $300,000 a year in expenses and costs to run the business, and you are an employee at company RGOY. How much fun is that going to be? Well, now you have a salary, you have an expense, because you want to sell your time to the company. You're working in this company, and that salary is a $75,000 expense to the company. You obviously need that salary to justify you working there, but it's an expense for the company. And now you want to raise because you've been working so hard at this company, and you believe that you deserve $100,000 a year because life is more expensive and everything else. So you want $100,000 a year. Well, if you want to go from $75,000 a year to $100,000 a year, that's an additional $25,000 expense for your raise, which means in order for the company to justify paying this additional expense, they're going to need to make more money off of you. Because remember, the CEO who's looking at this is going to say, we are looking at our profit. Because the owners of the company get paid through profit. The owners of the company don't get paid through salary, they get paid through their ownership in the company. And the way you get paid through ownership is through profit. And so if the CEO of the company is running through the expenses, the owners are going to want to see a growth in profit. And to justify paying you an additional $25,000 a year, the CEO might say, we need to increase revenue by $50,000 a year. At this point, you might say, well, that all makes sense, Jaspreet, but how does this actually apply to me? How do I build wealth and get rich? Well, there's a few things you need to understand. That way you can actually build wealth in this economic system and use this system to your advantage. Number one is more of a reality check. You own nothing as an employee. If the company finds a better employee than you, you will be fired and you will get nothing. Maybe you get a nice severance check, but you get nothing out of the profits of a company. If you break your leg and you can't go into work anymore, your company will get rid of you and find a different employee. Or if your CEO runs the company into the ground and the company goes bankrupt, you will lose your job and get nothing minus maybe a severance check if you get that. Number two is salaries are generally capped. Unless you're on some sort of performance pay or commission pay, there's a limit to how much money you're gonna make. So if you make $75,000 a year and you make, let's call it $150,000 a year of revenue for the company, it doesn't matter if you're able to take that to $2 million of additional revenue a year. That additional money is going to profit, and there'll be a cap on how much money you make. So salaries are capped, but there's no cap to how much profits that you can make as the owner. And this brings us to number three, and the most important part for you to understand, which is that profits go to the owners. This profit doesn't go to the CEO, it doesn't go to the employees, it doesn't go to the customers, it goes to the owners of a company. But here's the catch. Anybody can be an owner. Customers can be an employee at the company. Employees can be owners of a company. The CEO and the executives can be owner of a company. The owners could be a random person sitting on a beach. Anybody can be an owner and take advantage of this when you understand the game. And this is where I want you to listen to me very carefully. I'm not saying it's a bad thing to be an employee. I am an employee at my own company. I created Briefs Media. I'm the CEO of Briefs Media. I'm an employee at the company. But as the owner of the company, I am entitled to the profits. I want you to understand that it's not bad to be an employee, but to understand the way you build wealth is not through your salary alone. It's through turning the salary that you're getting, which is an expense at the company, and turning it into an asset by turning your salary into ownership. And I'm going to show you a few different ways that you can do that. Now, this is where I also want to remind you that if you're interested in being an investor, my team at Briefs Media publishes a free daily newsletter called Market Briefs, where we break down what's happening in things like the stock market, the housing market, the crypto market, the global economy, and our own economy into a fun and witty and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every single morning. Plus, when you join Market Briefs, you'll also get our investing masterclass just as a bonus for joining Market Briefs. So if you want to join Market Briefs and get our investing masterclass, all you have to do is click the link down in the description below. So now we've established that the way that you build wealth in this economic system is by becoming an owner, because when you become an owner, you're entitled to profits. Why does that matter? Because now when you own the profits, you actually own something. And when you own this thing, you don't have to work to get paid. Because now when you have your share of the profits, you own this piece of the company. You could be sitting on a beach in Hawaii while the employees are working to make this company run and make this company profitable, while you get your share of profits. And now if you break your leg and you can't work, you still have the profits because now you own something. Not to mention, when you're an owner, your profits are no longer capped. You know that your salary is capped versus your profits are unlimited, because a company can make unlimited profits, but you generally don't see that with salary unless you're on some sort of salary or performance pay. And this is why you need to become an owner, that we can actually have that wealth. But how do you actually become that owner? Well, there's three ways that you can become an owner. You can earn your way there, you can buy your way there, or you can build your way there. Let me start by how you can earn your way there. This one's going to depend at which company you work at, because some companies are going to reward you or employees at the company through some sort of equity, some sort of ownership, some sort of profit share, some sort of distribution, because you are working at the company. Now, not every company does this. This is going to depend on what industry that you're in, but some companies will offer some sort of profit distribution to the employees, because now if you're working at a company and the company makes bigger profits, you might be entitled to some sort of bonus, some sort of equity, some sort of profit share. Like at Briefs Media, we offer a profit share to our employees as a bonus for helping to build an amazing financial media company. But let's assume you're like most people and your company does not offer any sort of profit distribution, any sort of profit share, any sort of equity. How can you buy your way there? Well, let's go back to what I was talking about in the beginning of this video. Your CEO has a fiduciary duty to the shareholders. And when most people think about shareholders, they're thinking about shares of companies. When you think about shares of companies, what are we talking about? Stocks. What are stocks? Stocks are publicly traded companies. These are companies that anybody can go onto the stock market and buy a piece of ownership in. For example, McDonald's is a publicly traded company. Amazon is a publicly traded company. Apple is a publicly traded company. Yeah, you could be a consumer there and buy their products, or you can also take some of your money and buy ownership in these companies. So if you buy one share, one stock of Amazon, you become one of the owners of Amazon, and you were entitled to your share of the profits because now you are one of the shareholders at Amazon. Now, of course, if you own just one share of Amazon, you're not Jeff Bezos, but you're now starting to become an owner. You're now starting to think in terms of profit. And while you don't get to tell the company what to do, you do get voting rights. And so you can participate in the decisions of the company. You don't have to do anything. You don't have to go into the Amazon headquarters. You don't have to vote, but you have the ability to do so when you become an owner. So how do you buy your way there? You can find publicly traded companies. Not every company is publicly traded, but some are. Many of the biggest companies that you know of in America are, and you can buy your ownership in those companies. Let me give you a couple examples. Now, I gotta remind you, investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But we just talked about how you can invest in an individual company like Amazon. If you wanted to invest in Amazon, I'm not telling you what to invest in, this is just an example. You can go to any stock brokerage. There are so many out there. Just do a quick Google search and find the one that's right for you. And if you buy one share of AMZN, this is the ticker symbol to buy the Amazon company. If you buy one share of Amazon, you become one of the owners of Amazon. But here's the problem with that for many people. You're taking on all the risk. Yes, if Amazon does great, your stock price could shoot up and you can make a lot of money. But the problem is, what happens if Amazon doesn't do a very good job? What happens if they get slapped with lawsuits and they go bankrupt? Well, now you lose everything. So more risk for more potential return. The alternative to investing in Amazon is to invest in something like a ETF or a fund. This is a basket of companies. For example, SPY or VOO, these are two ETFs that both give you exposure to the S&P 500. This is a group of the 500 largest companies in the stock market. I put an asterisk here because I'm personally invested in VOO. So now, instead of investing in just Amazon, you're investing in a fund that's giving you exposure to hundreds of companies, the 500 largest companies in the stock market, which includes Amazon, which includes Apple, which includes Microsoft, which includes McDonald's, which includes Coca-Cola. And now you don't have to worry about trying to keep up with the company and guess if this is the best company or research the company and spend all that time researching the stock. You just invest in the fund and now you just keep buying. I call it ABB, always be buying. You follow the strategy where every week, every 2 weeks, or every month, you just keep buying no matter what, whether markets are up or down, you just keep buying for the long term. And that has been a proven strategy to win. The key is to keep buying and not to panic sell when markets go down, and to keep buying even when markets are crashing, and to keep buying when markets go up, and to keep the patience because you are investing for the long term. I'm talking about years, if not decades. That's where the wealth is built. So how do you buy your way there? You find a publicly traded company. Maybe it's your company, maybe it's somebody else's company, and now you decide, you want to invest in an individual stock and take on more risk for more potential return, or do you want to invest in a fund and just invest in the American economy? Again, this is where market briefs can help you stay up to date on what's happening. Plus, you'll also get the investing masterclass, which can help you be a smarter investor. The link is for you down in the description. Or you could do number 3 is you can work to build that ownership. You can work to build that equity in a company. What does that mean? This means going out and starting a business. Now, this I kept last because this is not for most people. Because starting a business is hard, starting a business is risky, starting a business is very time consuming, and most people are not made to do it or don't want to do it and shouldn't do it. I know there's a whole culture out there of people talking about how being an employee is bad. You need to start a business so you can build wealth. Look, the reality is you don't have to go out and build the business. You can just own the business. You can just buy the business. You can just invest in the business. Now, some people are entrepreneurs. That's great, but it's not for everybody. If you are an entrepreneur, great. I love entrepreneurs because I felt like there was not that many entrepreneurs when I was getting started with my business journey. But if you want to be an entrepreneur, understand that it comes down to understanding 2 things. Number 1, you have to have a good product. And number 2, you have to have customers for your product. And then you work to create a great product, and then you find the customers for your product. Those 2 things have to marry each other. If you create a great product, but you have no customers, your business will fail. If you have great marketing, you have great advertising to get customers in, but your product sucks, your business will fail because eventually your marketing is going to stop bringing in more buyers because people are going to realize how much your product sucks. So yes, you can build your ownership as well, but understand that this is really not for everybody. This is for people that want to be entrepreneurs. There's nothing wrong with being an employee, but the key to building wealth is to turn your salary into ownership. The way you turn your salary into ownership is by not spending all of your money, taking the money that you don't spend and become an investor. Where do you go and invest that money? Well, now you can take your money and invest it into companies, into other assets. That way now you have the ownership. That way now you actually own something. You're no longer capped by your salary because now you're working for profits rather than salary. And now you are the one that's getting the profits so you can build true wealth in this economic system. Being wealthy means your investments are making you enough money to pay your expenses so you don't need a job to pay your bills. The problem is most people will say, just invest your money into the stock market. But what if you don't know what stocks to buy? Or what happens if the stock market crashes and now your portfolio gets cut in half and you were relying on that income to pay your bills? This is